Gold bullion starts 2024 at record high prices. It rose 13.7% last year, closing at $2,062 per ounce in terms of the US dollar. Gold also finished 2023 with fresh year-end records against all other major currencies too. In the past, new all-time highs for gold usually came on a surge of private investment demand. And today, some coin shops will tell you there's a gold rush happening right now as well. But that isn't the true picture for gold. Far from it, in fact. First, private capital did not rush into gold last year. On the contrary, investment demand for gold, net of investor selling, fell to its weakest in 8 years. Sentiment on BullionVault's Gold Investor Index, which tracks the number of buyers over the number of sellers, was also the weakest since 2014 too. Back then, the precious metal was mired in a deep bear market following its then record highs of the global financial crisis. This time around, investment demand fell in part because gold was hitting new highs. Record prices offered a strong gain to existing owners, and no one ever went broke taking a profit. Just as important, interest rates on cash and bonds have reached the highest in nearly 2 decades. Again, that has encouraged profit-taking in gold because it offers sellers a place to park their money where, in real terms, they can beat inflation for the first time since the banking crash of 2007-08. This rebound in real interest rates, after you account for inflation, deserves your attention no matter what assets you're planning to buy in 2024. For American savers, it marked the steepest increase of modern times, outpacing even the big jump of 1981, which finally killed the 1970s dreadful inflation at the cost of a deep recession. 4 decades ago, that jump in real interest rates also crushed the price of gold, because the precious metal, which as a physical asset pays no yield, couldn't compete. Gold in 1981 made the steepest drop on record in real terms, losing 1/3 of its value. But 2023, in contrast, saw gold rise in real value, outpacing inflation in the cost of living by more than 9% for US investors and savers. How did gold overcome the kryptonite of sharply higher real rates last year? In 2 words, central banks. Yes, household demand for gold jewelry has been running strong, recovering pre-pandemic levels, but at prices $500 per ounce higher than in 2019. Central banks as a group, however, led by the People's Bank of China and followed by Russia, India, and other emerging economies, have so far in the 2020s bought the most gold bullion since the early 1960s. Back then, gold underpinned the dollar and the US currency, then underpinned the rest of the world's money. Private investors, in short, are responding to gold's new record prices like it's actually stuck in a bear market. Central banks, in contrast, are behaving as if today's worsening geopolitical tensions are like the height of the Cold War, buying gold for financial protection at the fastest pace since it was the linchpin of the global monetary system. If you'd like to join them, buying and owning physical gold in secure storage ready to sell for full value the very moment you choose, go to BullionVault today. Please like this video and subscribe to our channel.